hear me okay? Okay, so yeah, you guys can hear me okay, right? So that's good. 6 o'clock. I will try to finish class for 1 hour. We have a lot of material to go through today. Okay, let's give everyone a second. Okay, so give everyone a second. It's in live trading, right? Everybody knows it'll be in live trading. Stream is on. Okay. Cool. So housekeeping. So this is live. This will be streamed, and it's part of the 15-week. Darn it, 15-week class. This the setup. I'm a bit behind because I'm a bit jet lagged. So forgive me if I'm not as fluid as I normally am. So next week will be level 2 analysis and tape reading and financials, right? So time frame. The reason why I put this in time frame analysis right before level 2 in the tape is, and this is actually key. That there's a reason why I put this before level 2 in tape reading. It's because if you don't understand how to read multiple time frames in different ways and extract this information into your trading strategy, how can the tape help you? Because the tape is just printing off data. You need to be able to see if this tape is forming a trend. And the only way to see a trend is if you can understand this price action, the candlestick analysis, this candlestick on different time frames, the 2-minute, the 5-minute, the 10-minute. Okay? So everyone mute your mic, same like every class. And the reason for that is I don't want to be distracted when I'm making a comment, and I myself don't know how to mute you guys. So if you guys are just interrupting class, somebody will have to go mute you. Okay? So yeah, just be respectful of others. What else? So today's multiple time frame analysis. So hopefully you guys did all the homework and you guys read the level 2, the Anna Cooling book at least twice now. Okay, you will understand. If you still have questions about volume analysis, it's because you haven't read it thoroughly enough and then you haven't applied it properly. So the key here is application, right? You know that the 50-day moving average will cross the 200-day moving average. That's bullish. You understand that concept. You know it. You're an expert, but are you applying it properly? And are you making money? You see how these classes are working? You're learning the classes. You're learning the material. You're an expert now, but you have no idea how to apply it properly, and you have no idea how to make it so you're making consistent and profitable money. Consistent. You have to be consistent. Every day you're making $100. Every day you're making $200. Every day you're making $50, right? So consistency and then profitability, right? Why are you learning these concepts and applying them if you're actually losing money? Okay. So you guys, the team isn't here. I don't think Jem and Oak are here. So you guys can type your messages here if you want to. I don't mind, but do refrain from just typing random things, right? Because it will clog up the stream later. So that's housekeeping. Okay, so agenda for today. So I'll do housekeeping. I'll walk through the mission vision statement. I'll show you my personal setup. You guys can see this up here, right? Just scroll up a little bit. You can see my agenda here, right? It's right here. So my personal setup, my time frame, how to, the flaws in time frame studies, flaws. People are using their time frames wrong, okay? Their strategies will never make sense because they're using them wrong. So the videos I posted for you to do your homework is to give you some more insight. What are the mistakes people are committing when doing time frame analysis. Why are they getting in at the wrong time? And why are they getting in and nothing's happening, or something is about to happen and they get shaken out? It's because they're missing something important in another time frame, in another length, it's long and short, right? For time frame analysis, it's long and short, long time frame and short time frame, right? They're missing something, right? So I'll walk through that. You have to look inside the candle. Different time frame shows different things, and wrong strategy application, okay? I am a momentum trader. I'm an intraday trader. I want to scalp the thing for 20 cents on the way down. Why am I looking at the weekly time frame, or why am I looking at the 1 hour time frame? Why am I looking at the 4 hour? You shouldn't be. And maybe you have a strategy, but in general, you shouldn't be, okay? And then we'll go through some examples for swings and scalps, and then we'll use a scanner to pull up. I'm going to show you from beginning to end. How are we going to look for the ticker, understand the ticker, study the ticker, and then load the ticker, and then wait for the money to come. You're going to put in your stop loss, and then you're going to, if you get stopped out, you get stopped out, okay? But if you start moving, the money's moving your way, the direction it's going in your way, then you're going to start taking profit, okay? So I'm going to show you that at the end, okay? Did I make sense there? I'm a bit jet lagged, and I'm a bit tired, but hopefully the things I'm saying is making sense. Sometimes I'm saying things and I don't even know if I'm making sense, okay? All right, so that's the agenda. So housekeeping, as you know, I'm splitting up the rooms, okay, to different strategies and to focus on the buddy system. If you like Nico's trades, or you like Vegas's trades, or you like Paula's swings, or you like TJ's momentum plays, or you like Messiah's scalps, or whatever, you could click on their channel and follow them specifically for their alerts, okay? And you can learn from them. But if you don't know what kind of a trader you are, and you're a beginner trader, you could go to Trading Floor Miners, right? If you're like an expert trader and you could trade anything, yes, post all your trades in majors. And if you are confused, like, I don't know where I should be, like, I don't know what to say to that. Like, if you don't know what to, just post. Are you a beginner? Post in minors. If you're an expert, post in the majors, right? That's got to be the easiest category breakup, right? That's easy for you to do. It's easy. It's like, if you like Zach's low float alerts and swings, message him in low float volatility. What are you looking at? I'm looking at this. He's going to communicate with you. Deal? If it doesn't work, we'll go back to the old system. And if this doesn't work, you guys all owe me what? A martini, right? You owe me something. Okay, so we'll try this. Okay? And some options and stuff. There's the US equities. You can see it on the side there, how I broke it up. And zero tolerance, meaning I'm tired of people posting this. ASTK, MBRX, LFIN. What does that mean? Is that going up or down? Is there volume, no volume? Is that a swing? Is that a momentum? Is that short or long? Especially, the most annoying thing is you're a shot caller. You have a responsibility, right, to teach others to trade, teach others to trade and make money profitably, and not just randomly call things. And then you're posting this kind of comment. You're confusing people. You're confusing me, right? I mean, if you guys don't agree, okay, maybe Superbloom, you're just too angry. People like to post that. People understand that. That's fine. Because this I will crack down on it, especially if you have a shot caller title, you have some kind of a special title, and you're posting this way, okay? If you're a newbie and you don't know what the hell is going on, fine. I will see that in the Trading Floor Miners. You're posting stuff like, oh, JagX, should I get in? Should I get in? Fine. You could post that in minors. That's fine. But if you're in the major chat room and you're posting that, it's going to make me think, like, who is this guy? Should he be demoted, right? Remember, this is a free chat room. The quality still needs to be there. All right? So that's enough of me yelling for now. Next week, we'll find some other things to yell about. Okay? Okay, so the mission and vision statement. Okay, so the vision of United Trading Capital is to deliver the highest quality of care and superior returns across all disciplines of the capital markets in a diligent and prudent manner to inspire the next generation of professional investors. Okay, so my comment here is this. Nobody here has seen a bear market unless you've been trading for at least 10 years. Is that true? Everybody who's joined has never seen the market correct itself. All right? I left when the market corrected itself. Okay, I was mostly in cash except my long-term positions. Okay? I was like, you know what? Screw this, because I had to adjust myself. I had to figure this out. Nobody in our room, I don't think anyone in our room is going to raise up. It's like, I lived through 3 recessions and 3 market corrections, and I know how to trade this. Nobody said that, except maybe JR, maybe TJ, maybe a few others, okay? But the majority of us has never seen a correction. So the highest quality of care and superior returns across all disciplines. We have to be disciplined enough to say, hey, look, the market is not going to be bullish anymore. We have to adjust ourselves, okay? So that's the vision. Okay, so the mission of the United Trading Capital is the world's leading network for institutional and proprietary trading through mentorship with the lifetime goal of independent wealth and the continuous pursuit of philanthropy. We've done that. We've interviewed Adam Koo. We've made traders who wanted to learn money, those who want to stick around, preserve their capital, stick to the rules. Those guys are making money. But those guys, the other traders who you don't see trading with us anymore, have blown their accounts through the roof. They've underestimated a market correction. The institutional money are not buying anymore. There's no volume in this market. If there's no volume in this market, what's going to happen to your trade? It's going to take longer to evolve. There's not going to be a bigger, the volatility is not there, so the momentum's not going to be there. The spikes, it's not going to get 200% runners every day, right? No more. That was January. That was the January effect. Okay? Okay, so that's enough about me ranting. Mission and vision statement. Okay, so I'll show you my personal setup for time frame analysis. You guys have done the homework on time frame analysis. You guys should at least know at this point what it means when I say time frame analysis and multiple time frame analysis. Okay, so people always wonder, like, okay, Superbloom, are you a scalper? Are you swing trader or long term? I'm everything. Okay, look at here's my setup. Look behind here, Debussy, Chopin, Beethoven, Mozart, Schumann, and Bach. They're all split up by strategies, okay? And those guys are composers. Okay, so on this screen, I have 6 different, on this time frame. You guys can look at it. This is, what is it? This is Debussy, right? This is 1 day or 4 hour or 1 hour time frame. You guys want to write that down. I go 1 day, 4 hour, 4 hour, 1 hour. These are my swings. Okay, it never goes below that. Okay, sometimes I go on the weekly. Never goes below that. These are swings. Okay, these are swings. Okay, so I monitor my swings on multiple levels. I want to see everything. I want to understand. And okay, Chopin, smaller time frames. Give me 1 second here. Okay. Okay, I'm gonna cross this out. No, cross out my thing. Cross out my account number. Just give me 1 second here. Okay. And you guys can see the other stuff. Quantity, I don't care. Okay. Okay, so the other, look. Right? Close out everything. Look at this one. This is another setup. This is one with, for my swings, ask yourself this. For my swings, do I care what the level 2 and the tape is showing me? No, I don't care what the tape and the level 2 is showing me. They're too fast, right? I don't care. But when I zone in on it, I want to see the level 2. Look at click. I see the level 2 and the tape for this setup. This is gonna be intraday, right? Within 1 day, 4 hour. No, 1 day, 30 minute and 5 minute, right? It's within the day. It's intraday. It's within the day, right? Does that make sense? Do you see how I'm doing this? Okay, and then on my Mozart one, I have the bigger setup, which you guys have seen before. I have the tape on one side. Okay, let me cross out my account number. I mean, you guys can have my account number. There's no money in it anyways, right? I spent it all in Japan. You know those sushi, they're not cheap. They're not cheap. Okay, look at this. This is my other, this is Mozart, right? This is what, I have the tape here and I have another 3 time frames here. Look closely on the left, 5 minute. Look closely on the right, 2 minute. Look closely at the bottom, okay? The bottom corner there is actually the daily. It should be the daily, but for some reason I have 1 minute there. It's daily, okay? It's flexible here. So how am I splitting this up? I have it long, I have it swing, then I have it intraday, then I have it scalps. I am going from, just like this website, which I will tell you later, biggest to shortest, right? Or longest to shortest. Okay, look at this. You guys getting this? Am I confusing anyone at this point? Longest to shortest, weekly, daily, 4 hour, 1 hour. But from left to right, the way I can click through this is I can go from, I can zone in from the sky, I can look at it from the airplane down to looking at the ant with a microscope, because I'm clicking from left to right. When I get to Bach, which is at the bottom of, which is at the end of my setup, I'm zoning right into it. I can see who's trading what, right? From Debussy, I can see which institutionals are loading what and how much volume. Remember, I am zoning in. So remember, time frame analysis is a study of the technical analysis, yes, with the emotions and all that, but we're zoning in. Every time we get to a lower time frame, a smaller time frame, a shorter one, a shorter time frame, we are understanding it and on a more in-depth level, a more microscopic level. Understand that? Microscopic. You can get to 1 minute. You can get to 15 seconds if you want. Day Trade Warrior has a 15-second time frame breakdown. I don't know why he does it, but he does scalp. Like, he's in a ticker for only a minute. So he does need 15 seconds. He only wants to see 20 seconds of time. Okay? Is that clear? Did I lose you there? So I'm showing you my setup. Okay. Multiple setups, right? And you can adjust it however way you want. But I have so many setups, I confuse myself. Okay? So we did the personal setup, time frame how to. Okay. So look, let's do this example. Look, what's a good ticker? Let's do JEGX. Okay, first of all, did JEGX run on news, or where did it run on? Does anybody know what JEGX ran on? On pump, right? Was it on pump? I don't remember and I don't care. Okay, so FDA news. Okay. Okay, so we'll do it. First of all, we'll do the weekly time frame. Okay, look at this. So what we want to do is this. If here, write this down. These are rules. If you're a long term, you want to be looking at it in a 1 month chart, 1 year chart, right? Longer time frame. The longer the time frame, the longer you are in the trade. The shorter the time frame, the shorter you are in the trade. If you are looking at the 5 minute time frame, you're only in this ticker for like maybe 30 minutes maximum, 1 hour. Because in 1 hour you have what? How much? What's 60 divided by 5? 15? No, crap. 60 divided by 5. Okay, 12. You're only there for 12 sessions, right? 5 minutes. Right? Think about it. If you are a long-term investor, why would you want to look at the 5 minute? You wouldn't, right? If you're an intraday trader, you're only looking at the 2 minute. You're only looking at the 1 minute, correct? Is that correct? So if you're a swing trader, you're going to be using the daily, right? 1 hour, 4 hour. 4 hour, I'm going to put a star. The 4 hours is a very important time frame. It is actually called I actually personally call this the hidden time frame. Nobody uses the time frame, but it should be the most widely used time frame. The Forex traders are using the 4 hour time frame. I wonder why that is. And the currency markets are moving what? The highest volatility market in the world is the currency market. Yet they're using the 4 hour. I wonder why. Okay, so we'll go through that. It's a hidden time frame. It's a secret time frame. Okay, so we'll look at JEGX really quickly. Look, on the 1 minute, right? This is trading sideways, bouncing off, Look, can we predict this? Can we predict this? Let's just, out of curiosity, look at this 1 week time frame. 1 week. This is trading sideways, correct? What are we seeing here? Trading sideways. Buyers are stepping in. Are buyers stepping in the last few weeks here? Yes, buyers are stepping in. Okay. But what are we noticing in this chart? This candle here. Are you guys learning this here? Look at this candle here in this chart, the 1 week. I'm writing this down in my book. On the 1 week time frame, when I looked at JX, I'm seeing a ton of volume come in, but support never broke. Support never broke. And buyers are coming in. Do you see buyers just coming in there? Who's seeing that? I'm just picking a ticker. I actually, okay. You guys are seeing that the buyers are just stepping in, right? Slowly. And then the moving averages, we did this, right? The moving averages, here's the moving average cross. Here's the moving average cross. Like, these are the things you need to study. I need to look at the moving averages. I need to look at the volume. I need to look at the price action, right? Why are you looking at these time frames? I'm studying 1 week, right? This is the 1 week time frame for JX. The moving averages, the momentum is crossing there. It crossed last week. The EMA crossed over the moving average last week. Buyers are stepping in. Is that going to give you an indication that something is about to happen here? Tell me that. Is that right? Or I'm just pulling a ticker that, am I right? Like, you can see this in the volume, right? A lot of selling pressure, and then buyers are starting to come back. Okay? So that's what I'm going to write in my weekly. The moving average, the momentum is changing. Support is being held here. The RSI. No, look at this. On the weekly. Like, I want you to be thorough. You guys might think, oh, this is boring. You know what? I don't care about the weekly. You'd be wrong. Okay, look. Look at the momentum. The RSI cracking over. Like, sorry, I'm circling the wrong picture there. Sorry, that's okay, it's cracking over right there. Right? So I'm going to delete this picture, sorry. Okay, here, look. You see that? It's crossing over. There's something happening here. Should I watch this for a few more weeks? Yeah, sure. Go ahead. Go nuts. Today it ripped 150%. Was it worthwhile for you to keep watching? Yes. Was it worthwhile for you to go look at the SEC files? Was it worthwhile for you to go read the newspaper? Was it worthwhile to follow somebody who's a JX expert and read what the heck's going on and see why are buyers stepping back in and loading this? Right? Okay. So what I like to do is now, put this on the 1 week and now put it on the daily, right? Now this is, so here's a rule that you need to write down. If you are looking time frames have to be close to each other. Close to each other. Meaning, if you look at the 1 week, you use the 1 day. If you look at the 1 day, use the 4 hour and 1 hour. If you use the 1 hour, look at the 30-minute and 4 hour, right? Please don't go study a chart and go look at 1 week and then go, oh, you know what? I'm going to look at the 2 minute. Does that make any sense? Does that make any sense? If the time frames are too far apart, they're not going to give you the correct information. They're not. So that's probably the first thing people make mistakes. Like, okay, I'm a swing trader, and then now I'm stuck in it. So I'm a momentum trader. I'm going to look at it on the 5 minutes, see if it's going to break out. This is not how it's going to work. This is you. If you flip flop between your strategies, you will get caught between them. Okay. Adam Koo talked about this in his interview. Okay. So on the daily chart, right? Okay. So daily chart, what are we noticing? RSI moving up. Buyers are stepping in here. Look at this. Yesterday, before the pop. Today it popped, right? Today it popped. But yesterday, was there buyers in yesterday? There were buyers in yesterday. You can only see this. Look, on the left, you see the 1 week. You're saying this is bullish yourself. People are loading this. The RSI is moving up. But then you start watching this all day, all week, whatever, all day. And then you realize what? Buyers are stepping in. Wow. Right? Remember, now this is on your watch list. Now we're going to look at it on the, we're going to look at it on the 1 hour. Okay, so I need to change systems here because this thing popped. I don't know if it's going to give me the right data. Okay. Okay. So here. Okay, I'm gonna draw this, and then we're gonna. Okay. This is what I like to do. It's good habits. I don't do it anymore, but as a beginner, you should do it. Okay. Notice the volume there on the daily on the left. Okay. It's trading sideways in congestion, right? Yesterday, more buyers again today. Okay, so here, let's look at here. On the left, I have the daily. On the right, I have the 1 hour chart, right? I'm noticing the volume and the number of buyers. There's definitely more buyers stepping in. And look at the price action from yesterday, from the chart, right? It's holding support and it's climbing. There's something up here. Is it possible that we predict, and let's say if we were here and we were looking at JX and we were looking at this chart together, what are we going to do? We would load. There's something going on. There's something retarded going on. Isn't there? Isn't there? How come there's volume coming in? How come the weekly is showing buyers stepping? How come the momentum is changing, right? And notice the last candle on the 1 hour chart. Look at closely on my picture. The last candle on the 1 hour chart. Look at it. A lot of sellers. So what? The price is still being held above the VWAP and above those moving averages. It's being held. There's 50 million sellers. 50 million sellers came in to dump. But you know what? 50 million buyers came up to hold that price up. They want this. Institutionals, insiders, they want this. They know something is up. Is that right? Okay, so here's the question. If we load a ticker and we think something is up and it drops the next day 20%, what happens? We are stopped out because we put in a stop loss, right? Because we put in a stop loss. That's trading. We don't know what's happening. We just have an educated guess from the study of the volume, from the study from the candlesticks, and the study from the different time frames, which is giving us different information each day. It's the daily gave me different information. The hourly is giving me an inside look of what happened yesterday and the day before that. What am I noticing yesterday on the 1 hour time frame? By the way, the 1 hour time frame is my favorite. Okay, I always use the 1 hour time frame. But the 4 hour, we'll go through that too. But the 1 hour time frame is the most. Like I can see clearly here. Support is being held. VWAP is holding this thing. Buyers are coming in. Sellers can't break this. Sellers can't break support. Right? Okay. Is that too fast? Is that too fast? Okay, we'll go through a couple more examples. This is the best way to do this. Okay, so 1 day, 1 month. So we'll go to the 1 hour, and then here we'll go to the 30-minute time frame. No, you know what? I'll skip the 1 hour, and I'll go to the 30-minute time frame, and then actually no, I can't do that. Okay. 1 hour and 30 minute. Okay. Okay, 1 hour and 30 minute. Okay. Okay. Oh. Oh God. Okay. Bear with me. I'm slow on my mouse clicking. And price line here. Okay. Oops. It's gonna be confusing here, but who cares? Right? Okay, so we found, so what's the story? We found JX, somebody alerted JX 4 weeks ago. Somebody said, hey, there might be an approval. Here's the stock twist. Somebody said, Superbloom said, oh, let's load JX. Let's keep watching this, right? So we watched it on the weekly. We watched it on the daily. We watched it for the hourly. We're seeing buyers come in. We're seeing the moving averages come in. And then the next question is what? When do I get in? Is that right? When do I get in? Because now we're like, okay, it's trading sideways. Like, when do I get in? When is it going to pop? Like, what should I do? Okay, so we need to go into what? Okay, I'm going to post this chart first. This is the 30-minute time frame. This is what this website, which I'll give you the link later. It's actually up top. It's called the they call it the execution. I don't know what the people actually call it. Okay, execution time frame. Is when you actually have to get into the ticker, right? Like I have to figure out how to get into this ticker. Like what time frame do I use, right? Well, it doesn't matter. The support, look at my picture. The support at the bottom there, that 14 cents is actually 13.7 at the bottom there on that my picture. It doesn't matter what time frame you're looking at. The support is going to be the same. Is that right? Like probably that's one thing that you guys must have stepped. It doesn't matter what time frame you guys are looking at. There's going to be support and resistance. The support resistance will be the same. However, if you go to a shorter and shorter time frame, you're going to see more support and resistance. You're going to see more support. You're going to see more places where people are buying. You're going to see more resistance. You're going to see more areas when people are selling. Is that clear? That's probably very confusing, but okay, I'm going to repeat that one more time. Okay, so on the weekly, you're going to see a big major support and big major resistance, right? But that support resistance will be the same on the 1 hour and the 1 hour time frame, right? And if you zoom in close enough, that same support resistance will show up in the 5 minute, right? But on the 5 minute time frame, you're going to see more smaller areas of support and resistance. You're going to see more, right? And then you're going to ask yourself, where should I take my entry? Should I take it on the 5 minute support line, the 1 week support line, the daily support line, the 1 hour support line? Well, here's the answer. Okay, the longer the time frame that you use, like the length, the longer. So if it's 1 week or 1 day, it is more pronounced. That support line is more it's more validated by volume and time. Does that make sense? So if you get in on a 2 minute support line on the 2 minutes, that thing will break faster. That thing will just go right through. Right? Because those buyers who bought in the 2 minute, like 2 minutes ago or 10 minutes ago, they need to come back in 10 minutes to buy there. Does that make sense? Basically, the longer the time frame, the more substantiated, the more credible those support and resistance lines, right? Because those resistance, the support lines that are being held on the weekly and the monthly and the daily, they've been there because people are coming back daily to buy there, to accumulate there. Is that clear? So that answers your first question. So, and then when you realize that the 1 hour, the 4 hour, the 30, the 1 hour, the 1 hour, the 30 minute, and the 20 minute, the 15, the 10 minute, 5 minute, these are all execution. These are all, you need to time your entries and try to get loaded in. Be very accurate about your entry. I want to load JX now at support. Look at on my 30 minute chart. I want to load it at support at 14 cents, right? At support. Or if it breaks over 14 cents or breaks over resistance, on my chart at the top there, that top line, I will buy it over the break of resistance, right? You're never going to buy in the middle in congestion. Is that fair? Okay, so let me take a step back here and prove to you. Okay, here's the JX on the 1 day. Actually, how about you guys do it yourself? Pull up the JX here. Pull up the JX daily and draw your support line. Draw your support and resistance line. It's going to be at 14 cents, right? Or 13.7 or whatever. It's going to be close. It's going to be exactly what you see on the 30 minute. Is that right? Right. Okay. And then if you go into the 5 minute time frame, because this is a swing on the 5 minute time frame, what do you notice? Same thing. These are right, but you're going to notice another line, and I'm going to draw it here. Okay. So there's 3 lines here. They all say 14 because my computer can't round. But this is the 5 minute time frame. Okay. That line. Okay. So here, these 2 lines. Okay, look, these 2 lines here that I'm pointing to are those support resistance line that we saw in the earlier time frame, the longer one, the 1 hour, the 30 minute, right? Is that right? Yes. But on the 5 minute, what are we noticing? We're noticing another area of resistance here. Okay, here's the other line. We're noticing another area. People are dumping at the 14 line. People are just dumping there. And as soon as on the 5 minute time frame that crosses, what happens? It's breaking out of is resistance. It's breaking out of its own congestion area, and what, right? On that, once it broke over, all hell broke loose, right? But how do you trade this? There's multiple ways to trade this, multiple strategies, and this is the confusing part, probably the most confusing part. You're gonna have to figure out your own time frame style, like time frame analysis, to meet your own personal trading strategy. Yes, if I was swing trading this, I would have loaded this last week. As I noticed support, I'm just gonna load and wait. Load at 14 cents and wait. Load at 15 cents and wait. Load at 16 and just wait, right? Because I notice buyers are coming in. That's a swing position, right? And if you're just like trading it today and yesterday you saw some volume come in, you would have bought at support at 14 cents and you would have bought over the break of that middle line that I drew, right? On the last pick, the bottom picture, right? That middle line, because that was your resistance area. That would have been your entry, correct? So different strategies here. It's all different. Does that make sense here? All these time frame analysis stuff, you're gonna have to use it to apply to your own strategy, and you can't be confused about it. There's some rules, like you can't use if the time frames are too far apart, they will give you wrong, like the direct. What is it? The sentiment of the stock is going to give you the wrong information. Okay, wait. Sorry, that was a bit. I know. I'm a bit choppy. I'm not saying everything. Okay, so look inside the candle. We kind of did that. So I'm just pulling up my notes here. Look inside the candle. Okay, so on the weekly chart, remember when we pulled up the JGX weekly chart, right? We saw buyers come in. Right? And on the daily chart, we actually saw when they came in. Is that right? So we're looking inside those candles, right? I like to look at the volume. Okay, look. So if we can see inside the candle. So weekly, so let's look at the last week, and this is last week. Okay, look at last week. Look at for JGX. Look at this. Look at JGX last week. On the weekly, we saw a bunch of selling pressure. Okay, but on the daily, what do we notice? Buyers are actually stepping in on Friday. Last Friday. Right? Is that right? Last Friday or whenever, those buyers came in. Look, last candle. Buyers came in right before it popped. Is that a coincidence? Who knows? Are insiders buying? Probably. Right? So you guys have to be able to cross-examine that. Okay, let's see here. Damn it, this thing popped. Okay. So you're going to look inside the candle. So daily, the same thing. You're going to see the buyers came 1 hour time frame. You're going to be able to see when they bought, how they bought, how much they bought, right? We're trying to figure out a story here. What the heck is going on? And try to figure out an entry. Like, what is my entry? Because what is my strategy? My entry is to buy at support. I buy at 14 cents with a tight stop loss. And if it goes down more, do I buy more? Do I sell? These are all your questions that you need to answer. And you need to be consistent about it, okay? Okay, so that's that inside the candle. So different time frame shows different things. We proved that, right? On the daily, it shows, so I showed that the daily, the 1 hour, the 30-minute, they all show different things, correct? But they're all showing that almost the same support resistance line. The 30-minute, the 5-minute, the 2-minute, as you get shorter in time, they show more areas of support and resistance, more areas. But do they affect you? Ask yourself that question. Do they impact me if I'm a long-term investor, if I'm trying to swing this for weeks? Does the 5-minute support resistance area affect you? What is the answer to that? Do you care? What is the answer to that question, please? No, it does not impact you. So ask yourself what your strategy is before you can confused by all these time frames, right? When I'm trading with TJ and we're scalping long and short, I'm looking at 5-minute and 2-minute, right? Like let's say Twitter. Here's a good example. On Twitter, I have this on the daily, and then I'll move it to the 1 hour, and you guys will voice, right? 1 hour. God, why is my... Okay, 1 hour here, and here I will have 5-minute. Okay, so, okay. And this is a strategy, okay? So this is what my screen would look like when I'm scalping something. And I could change it. On the left, I will, on my left screen, I will go 1 hour, 30 minute, 5 minute, 2 minute. Why? Let me tell you something. When the market opens at 9:30 in New York, and it only traded for 15 minutes. If you are on the 1 hour time frame, does that make any sense? If there's only 15 minutes of time that has gone through, there are traders that when the market opens, the first hour, they're on the 2 minute. And then when lunchtime comes, they're switching it to the 30 minute. And then as the day progresses, the full day, they're moving into the 1 hour time frame. Does that make sense? Now, because they want to see a trend, the longer, so let's write this down. The longer the time frame, the longer, no, the more substantiated, right? Substantiated the trend, right? The 1 hour trend, the daily trend, the monthly trend is gonna be more substantiated than the 5 minute or 2 minute or 1 minute trend. Does that make sense? Now you know why on voice I say, oh yeah, scalping it, but you're looking at the 1 minute time frame. It's like you're either holding it for only 3 minutes or like 5 minutes only for some volatility shake, right? It's in the 1 minute time frame. It's just moving up and down. It's not creating the bull flag. Like it is, but the bull flag is not substantiated as if you saw it on the daily time frame and you saw a bull flag forming on the daily. If you saw a bull flag forming on the daily, right, that's going to mean what? A bigger explosion than the 1 minute bull flag. Does that make sense? Did I lose anyone there? Yes, no, maybe so. Okay. So here I'm going to post this website now. I think I'm review this website. I like it a lot. It really breaks down what I'm talking about now. Okay. And watch the homework. Okay, so let's go back up there. So we talked about different time frame shows different things. Wrong strategy application. I've gone through that. Okay, I can't sit here all day and go through a very intraday short strategy with you and use the multiple the time frames I use personally. I could do that, but that's another class. Because remember, write this down. Each of your trading strategies have different trading rules. Okay, these rules govern your discipline. If you don't follow your own rules and create your own rules for your own strategy, for your own trading edge, how can you make money? And how can you? Here's the key word here. How can you back test? Right? How can you use time frame analysis to back test? Back test. Okay, so I have lots. I have 8 different trading strategies using different time frames and using different setups. Okay, so I'm just broadly brushing through how to apply the time frame analysis to your very specific strategy, so that when you trade, you're like, God, this trading strategy does not work. I must go back to study and back test to look at these different time frames to study what I did wrong. Okay, is that clear? Time frame analysis is to really study the past, study the present. It's no way in hell it's going to predict the future. Okay, that's what multiple time frame analysis, just to figure out what it wants to do now, like today, like the second. Okay, so that's that. Okay, so that's JegX. I showed you my, okay, so examples for swings and scalps, and I'm gonna pull up here's the scanner, right? Here I got the scanner. Oh, where is the scanner? Okay, here's the scanner, right? So look, I'm teaching you from beginning to end now, in the last 15 minutes, how we're gonna do this, okay? Look at the scanner. Low float, it's a nano cap, under 50 million as the cap. Price is under 20, all right? Float short is over 20%. Over 20% of this, the float is under selling pressure. People want to dump this shit, and people want this to go down to the ground. Average volume, I'm picking 300,000. I'm cheating. Normally I use 200,000, but I want more volume. I want this to rip quickly. I want fuel. I want fire, and I want it to be lit. Okay, RSI over 40, over 40. You could go over RSI over 20, over 30. It doesn't really matter. Okay, the reason why I use oversold at 40 is it's just about to cross over the bullish line. So what I mean by that is this. Okay, and I've actually never revealed this to anyone. So there's a reason. This is your RSI. This is the 40 line. Okay, when this crosses over, it's bullish. So I want it right under the 40 line. All right. This, and be warned, this is very particular to this trading setup. Okay, so you have to know something about RSI. The professionals, what they do is they look at the stock and they actually change their RSI numbers. They change the RSI links and strings and all that. They change this number. See this here? They change this. They change these numbers to close, open, 14 days, 13 days to reflect the different time frames. They changed them. That's how, but they're loading in the millions, right? When they put $10 million into a ticker and it moves 1 penny, they're down 100K. That means they need to change these numbers. Okay, so for our exercise, we're only loading $2,000, $5,000. We don't need to change these numbers, but the professionals will change this number according to the different setup and according to the different ticker, because each ticker has a different RSI DNA. The momentum, they swing differently. It's called beta. It's called volatility, right? Beta is the volatility, right? Okay, don't worry, we'll go right back to class. Oh, right back to the topic here really quick. See? And here's the beta. The beta shows up. Okay? So, just so you know. But why am I using the RSI 40? Because I understand that this Fitbit Scanner that I played with and tested and back tested, when it breaks over 40, it means that buyers will jump in based on this. This is just a guess. It's like a 80% heuristic. It's heuristic, right? It's just a guideline. Okay? Don't go, here what I'm trying to say is, don't go back to your desk and say, you know, I'm going to use the oversold RSI 40 for everything. You will lose your money. Deal? Okay, so let's look at the scanner. I've actually never looked. Okay, so let's quickly, so let's look at AVGR. I'm only going to look at the 1 hour time frame. Really quick here. So 1 hour time frame. AVGR looks good, right? Look, AVGR looks good. Just the 1 hour time frame. Okay. Ooh, AVGR does look good. Okay. Damn, I'm good. Okay, look, buyers are stepping in. Look, AVGR coming off this list, right? AVGR coming off this list. Is that something that we teach and is something that we see? Is that buyers are stepping in? Is that something that we can load with a stop loss? Do I even need to look at another time frame? Do I need to? Tell me, who thinks we need to look at another time frame? Say it. Who thinks we need to look at one? Sure, why not? Let's look at the daily time frame. Let's look at the daily time frame. Look at the daily time frame on this chart. AVGR. The selling pressure is coming right off. It's coming off. The selling pressure is going away. On the hourly, I see buyers coming in. Ooh. So now it says it's perked my interest, right? Remember, this scanner is telling me float, the short is 20% short. It's a nano float. It's going to have volatility. There's volume, and it's about to break over the RSI 40. And this thing shows up on my scanner. What am I telling myself? Okay, now I know the 1 hour time frame, and I know the daily. Do I need to look at the weekly, let's say? Do I need to if I want to swing this? Do I need to? Who thinks I need to? Hell yeah, look at what the weekly is showing you. The weekly is showing you something else. Hello? This is about to reverse. This is about to go up. You see what this is? You see what this is? You see that? Am I making this up? Is it possible that when we load this, like we time our entry? Now the question is like, where do I take my entry? Like, I don't know. I know this is going to rip, but I don't know what my entry is. Because if you take the wrong entry, you are going to get shaken out by the market maker. And how do I know that? Okay, let's look at on it. 1 minute. You know what? Let's just be a little bit more tricky and look at it on the 15-minute time frame. Right? Look at the 15-minute time frame. Ooh, pretty, right? Look at the 15-minute time frame. Where am I going to load it here? At support, right? Am I loading it at support? It's actually climbing. Is this the right tick? AVGR, it's already climbing, right? Is this enough to tell me like in one of my setups? This is actually one of my swing setups. This is what made. I'll tell you this right now. This is what made me quit my job. I made lots of money using this exact strategy. That's it. I just said, okay, there's bullish buyers are coming back. I'll just buy at support and I'll wait. And I went to work and I made more money in one swing than working. So I was like, you know what? I quit. So I know this strategy works. All right. But this is a strategy. This is a swing trading strategy. Swing. It will pop. I'm not going to guarantee it, but it usually pops within a week because the short interest is at 20%. I am adding fuel. Those shorts are going to get squeezed. I can see that on the weekly chart. Those buyers are stepping in. All right? Is that right? Okay, let's look at another chart. I will look at, because if we run out of time, at least we can go over 4-hour time frame, right? There's a secret to the 4-hour time frame. And I've written about this in my stock twits. Okay. Okay, so you can't see the charts that well, but you guys can pull it up on your own. The reason why I like it's the 4-hour time frame is important. Here's why. Okay, the 4-hour time frame breaks up the day. It breaks up the day, open and close. Okay, open and close. It's very important for trading, especially in the morning when it opens. We want to know if the morning it was bearish or bullish. Was it bearish or bullish in the morning? And was it bearish or bullish in the afternoon? Did the sentiment change in one day? Remember, it splits up the day. Remember the candle, how the candle is formed. The candlestick is, the most important thing is the open and close. The 4-hour. The beginning of the morning gives you the open. The 4-hour at the end of the day gives you the close. The open and the close at the end, they form what? Support and resistance, right? Remember, high of day is what? High of day is known as an area of what? What is high of day? What is high of day? Okay, so when the thing opens and it gives you the opening price, right? So that's why the 4-hour is important. Is that important? It splits up the day. It gives you high of day, low of day. It gives you the resistance, the support. Okay, so this is the AVGR for today. It was bullish at the end of the day. People are loading this ticker for some reason. Is AVGR next to RIP? Who knows? I don't know. I don't have a position in it, okay? I don't. But look at this volume. If we have to study it some more. Look. The volume traded above average. People want this thing. This thing went up 10 cents. Does it have volatility? Does it have the range to go very far? Let's see. Beta. No, not really. We want beta to be above 1, but it's okay. Who cares? This is from Market Watch. Okay, so we've looked at a chart. I pulled up the screen. I pulled up the scanner. We've looked at a chart together, and I've looked at it using multiple time frames to give me the entry point, to give me the volume, to give me the bias. Okay, bias is another word. Bias doesn't mean anything. It just means sentiment, right? It's giving me the market sentiment. It gives me the market's bias. Okay. Okay, so what else is on? Do you want? Okay, we have about 5 more minutes. Do you guys want me to look at another chart, another one on this on the scanner? Yes or no? Let's do it together. Okay, let's from the scanner, right? Because this is our scanner. We have to study each scanner the same way. Say DCAR. Let's look at DCAR, like from top to bottom. Let's actually zone in on the 4-hour time frame. Right? Actually, no. What's the daily showing? Okay. Actually, no, let's do it on the weekly. Okay, look. This is DCAR, right? What are we seeing here on the... Okay, bear with me here. Okay, look, really quick. We want the beta to be over 1. Yeah. You like things that can rip 200% can have a beta of 2. If you are trading, and I think on the, am I right? Right or wrong? The Fitbit Scanner gives you a beta criteria, no? Doesn't it? It does. I'm pretty sure it does. I remember seeing it. Okay, wait, let me see. It gives you a beta, right? Here it is. Yeah, it does. It does give you a beta. It does. So you can ask for it for a big volatility. You want something to, so here it is. Here's the beta. Here's the beta criteria, right? That's the volatility criteria. So DCAR, look at that. What did it form? On the weekly, it formed a doji with green volume. Is that right? At least write this down. I'm studying this on the weekly and I see that. Okay, and now the daily time frame, right? What am I noticing on the daily? Right? These freaking dojis, it's bouncing and it's trending. Now on the daily, I'm seeing it trending upwards. Good, it's trending upwards. Great, good for me. Good for this ticker. Okay, so on the 1 hour, on the 4-hour time, okay, it's split up in days. Split up in half days now. Right? I trust that it's trading sideways on the 4-hour. Okay? Secret. Oh. Okay. Oh my. Okay, something's wrong with my mouse, but I don't care. Okay. Support resistance. Oops, give me a second. I want to draw this line correctly there. Okay. And what do we need to realize? Okay, that took longer than expected. Okay, and I still drew it wrong. Okay, look at the top. See that resistance line? I trust that you can go back to your desk and draw that resistance line more properly than me, but there's resistance here. The price is getting rejected there. And see the bottom blue line? That's the support line. It's bouncing off that line, right? What do I want to study about the volume though in these days? The market is split. Look at the volume here in the 4-hour. The market is split every day. They're indecisive. In the morning, they're bullish. In the afternoon, they're bearish. In the morning, they're bearish. In the afternoon, they're bullish. So this is still trading sideways. Okay, so you have to notice that's a clue. This market is trading sideways for this ticker. Okay, that's a very important clue. Okay, so when you study the one hour, because now this is a swing. It's a swing idea. Okay, I want to take entry at that blue at this blue line here, where it bounces off this area here, right? Bounces off this area here. So it bounces off this near this area here. Okay, look at the volume on the 1 hour. There's more sellers. Now that we study it, there's more sellers. Right? Now we have an idea of this ticker. What it wants to do is trading sideways. It's moving up a little on the daily, but it's still trading sideways. My only entry is at support. Is that right? Here. See where I circle those blue lines? Those are my only entries. Because if you take an entry tomorrow, you're like, oh, studied this. He thinks it's going to rip, and you buy it tomorrow. The second you buy it tomorrow and it drops, because we on the 4 hour, what do we see? It's bullish in the morning, tanking in the afternoon, tanking in the morning, bullish in the afternoon. Like it's indecisive. There hasn't been a full day where the market has agreed that this thing should just go straight up or straight down. You see that? I'm trying to understand the psychology of this ticker. Okay, so for my last picture here, I want to load this at support. Does it go down to support for me to load? Okay, does it break resistance for me to buy the break over resistance? This is on the 1 hour. Okay, so and then that's all we need, right? This is a swing. I guess if you could go down to the, you could, but you'll just get more confused, right? So maybe I'll draw these lines again. I'll draw it properly this time. There's actually multiple lines now, okay? There's actually 4 lines on the 5 minute, right? Okay, so this is a good example. You could load here if you want, 1. You could load here, 2 if you want. You could load 3 here if you want. It's all up to you. It's all up to your strategy. Okay, look. So here's what it is. See, here's the 5 minute chart on DCAR, right? I can load at 210. I can load at 215. I can load at 221. These are all different areas to load. These are all technically areas of support. If you're looking at the 5 minute, you are looking at this screen. You're like, wow, there's so many support levels. That's why I want to ignore this. This is quote unquote noise for a swing, right? For swing trading, it's noise. I don't care. I just want to load it at the bottom where I wrote that 1 there, where I see the daily support or the hourly support. Does that make sense for this swing strategy, for this kind of time frame analysis? If you look at it on the 5 minute, all those gray lines become support and resistance. Now you're going to get confused. Now you're like, where am I going to load? Just realize that if you load it at 2 and it goes down to 1, there's some volatility. If you load it at 3, which is at 221, and it goes to 210, you're down 10 cents a share. Does that make sense? Is that clear how this is working? You have to anticipate. If you want to load it at 221, go ahead. But if it goes to 210, which it might, which it most likely will, you have to understand that your stop loss has to be wider. Right? Right? So that's why I avoid, for my swing trades, I want to avoid going too low, 5 minute, 30 minute, 1 hour is good. Okay, let's look at one more. There's actually one on that list. There's actually, I think Mara is about to go here. Okay, so Mara is on that list. Blockchain news, DPD, Riot, all those tickers are running on blockchain news. Look at Mara on my screen. Okay, so I'm going to put Mara on the weekly. Okay. Okay, I'm going to do it properly this time. Give you the full benefit. But you guys are not lost, right? You guys are okay here? Okay, so I want to load Mara. Remember, this scanner is built for what? It's built to locate Superbloom rippers. Okay, look at Mara. What happens in this area? I circled the left and circled the right. When it attacks this area, near this area, what? It trades near this area and it rips. This is on the weekly chart. I understand this. I understand that people want to make this thing rip around this area. Okay? Right? Look at the volume. We have to study the volume. That's why we read the volume book. The selling pressure is coming off. Okay? But there's a problem here. The selling pressure is coming off, but the last 3 weeks, the selling pressure is increasing according to the weekly chart. Overall, the volume is dying off, okay? But over the last 3 weeks, we see the selling pressure is actually there to dump. People don't want this to go up for some reason. That's what we notice, okay? Right? And then we go to the daily time frame. Okay? Daily time frame. It's now oversold here in this area, but tons of selling pressure, and it's holding support at 168. This is the daily time frame. You remember when you do your analysis, write it down. What is it? MARA, weekly time frame, daily time frame. What am I noticing? selling pressure. Okay, so we know that this most likely, it showed up on our watch list, but do we have to load it tomorrow or next week? No, we load it when we know the buyers are coming back. This, look at this. This is a good example. The buyers, I don't see any buyers. Do you? I don't see any buyers. And that's not even a technical question. Do I see a green bar? No, I don't see a green bar. That's it. Who cares what you want to call them? I don't see anybody green. I don't see any money to buy this thing. Okay? Okay, so let's look at on the secret time frame, the 4 hour. Is anything happening behind our back that we don't know? No. So the Mara time, it's still showing bearishness. Okay? Look at Mara on this is on the 4 hour. Sorry, I had to switch screens because my broker doesn't show me the 4 hour. So this is the 4 hour. What are we noticing? Selling pressure still. All right? Selling pressure. Okay, 1 hour. Okay, look carefully. Now we see Mara. Okay, look at Mara. No, don't. Okay, selling pressure coming in. Okay, I want you to study this properly. This is okay. So this is a good way to end this class. This is on the 1 hour time frame. This is my favorite one. Okay, this will end the class really nicely and make you read that Anna-Cooling book again. So is this selling pressure coming in or buying pressure? Here's the question. Look at the ways this is drawn. The momentum, the stock keeps tanking, but the selling pressure keeps going up and up and up and up. Okay? Have we seen this in the Anna-Cooling book? Wait, let me pull it up, okay? And this is a really important page in that book. This is a good way to understand it. And is it possible? We go back to the time frame analysis class. This is class. Can we see this type of price action on the weekly or the daily time frame? We couldn't. We couldn't see it on the 4 hour either. We had to have seen it on the 1 hour. Okay? We have to see it. It is that detailed. We are investigating the stock. When is this stock turning around? It's not. Is it about to turn around? Okay. Is it about to? I'm going to say it's about to. Okay? And the reason why I'm saying that is did I read this in a book? Okay, look at this. Look at this. Is it the same picture as what are we drawing there in Mara? Has this shown up in the book before that we read? Falling prices, increasing spreads or candles, rising volume. Okay, what does she say there? Basically, this is a reversal, okay? You could read it in the page. You can go to the page. We can't pull it up right now, but you can go to the exact page and pull this up, okay? This is a reversal in the making. Eventually, these are buyers. They are stepping in, but you don't see them. The selling pressure is coming off, but the selling pressure is coming off too so much, but this should be tanking. It's not tanking. It's not tanking near this area where it used to rip. It's not tanking around this 160, 150 area. We just have to let it come down a little bit more. And look at the time frames. It's now oversold, right? Like look at now. If we put the time frames to each other, okay, look at what's happening. It's oversold here and it's oversold here. And this scenario is showing up in the book. It's showing up in the book. Are the buyers stepping in now? What is our strategy for if Mara is on our watch list? We are now waiting for buyers to step in. As soon as we see buyers establish that support line, we see that support is now breaking, we are now loading the ticker. Okay? Do I have a position? No. Will I take a position? Maybe if I see support being built and buyers are stepping in. Some chat room is going to load it, and I'm going to be like, okay, I will load it as well. Some institution who knows patent news might come out will load it, and we monitor we watch for the buyers and sellers. Okay? So is that clear? You guys will have to go back and read that page, and you guys can tell me if I'm right or wrong. I'm pretty sure I'm 100% right that this is a reversal in the making. from the book. But you guys can, that's your homework. Go back and read the book and read that page, right? Read that page and read the web page I posted. Read the web page, right? From Trade City. Okay? That's a wrap for today. I apologize if that's confusing. But if you watch the video highlighted, like, write this down. It is important for you to know this part. So I tell you to write this down, this part. So when you read it again, you understand your notes are like, okay, yeah, it makes sense now. Okay? I promise you that once you apply it to the way I did it, you're going to learn how to use time frame analysis better. And it is an arsenal because each time frame in the end gives you a piece of information. You're looking inside the market. You guys know when you guys are like, oh, I think A, B, C, D in this chat room is loading this ticker. Well, I don't care. I could see it in the volume. I could see it on the different time frames. When they loaded, not why they loaded, but when they loaded, right? And if it's going to pop, is it validating volume? I can see all that. All right? Is that good? Yes, I try to teach you in a way that's common sense. I'm telling you, it's nothing technical. I'm just telling you. That's all you have to do is look for buyers and look for sellers and when are they loading. And the 4-hour time frame, right? We can see the sentiment split up between the days, within the day, right? It's important. All right? Okay, does anybody have any questions really quick? You have 5 minutes to ask a question. Oh, yes. Wait. Okay, so
Hi. Hello.
okay, so what's the question?
Actually, I don't know the channel.
How about no? That's okay. Type your question. How about you type it? You don't need to go on mic, right? You could type it. We could read it. It's fair, right?
I don't know where to type. I'm looking for the channel.
Or where to type. Okay, what's your question?
Can I get to this video and this class presentation in somewhere so that I can check back in the last 10 minutes?
Yeah, you could. You could watch these videos again on YouTube. Is that the right question? You could watch it again on YouTube. This will be uploaded later, and
Okay.
Can be uploaded on YouTube. Okay.
Okay. Thank you.
Okay, so it's all recorded. So, young guns, when looking at the volume bars, how are you determining whether it is buyers or sellers? So that's here. And Anna Cooling writes this in her book, right? It's just really confusing. So I'm going to copy it. I have it here. I actually have it here. Okay. She writes it in a very, okay. She writes it right here.
Actually, I can't see the screen. I don't know how to see the screen. I'm just listening voice, but no screen.
Can you go to the main trading floor and click Bloom Plays, right?
Actually, some reason I'm not able to find the trading floor, the Bloom.
Jam, can you help him go to the trading floor and just put the link so he can click into it? Okay, so read this comment here. She says, again, for this same setup, the same Mara setup, we're talking about the same Mara setup, figure 4.15. Okay, she says, again, another low risk opportunity to enter the main market. based on common sense, logic, and understanding of price and volume relationship. What does she mean by that? She says this thing is tanking. There's a lot of selling pressure coming down. Look how much selling pressure is coming through. Hey, look, young guns. This is a really good question. Look, young gun. Look, so much selling pressure coming through. If that much selling pressure came through, this thing would have tanked a lot more, don't you think? It didn't. It didn't tank that much. It tanked a little. It's still holding support. That means there's an equal amount of buyers who stepped in. This could be buying pressure, right? Like, let's look at it on the 30-minute time frame. Nope, selling pressure. Maybe that's all selling pressure, right? There. So on the 10-minute, you see buyers are stepping in there, which you don't see. Which on the 10-minute, when you break down the time frame, you see buyers are stepping in to hold that price. Is that fair now? It's not just completely selling pressure. It's not completely people dumping. People are trying to hold this price there, right? And if we break this down even more, we see okay, so does that help answer that question? You have to use it's so subtle. Based on common sense, logic, and understanding of price and volume relationship. I mean, it shows up red. It shows up red, but does that mean it's selling pressure? No, it doesn't. It could be buyers there stepping in. It's just that the candle closed red. It closed red maybe by a cent, but it could be all buyers. Okay? And over the next week, we can monitor this. As soon as buyers step in, we can load this secretly. Load it. And then when the news comes up, boom. Right? Does that help? Does that help answer that question? Okay, what other questions? Okay. Okay, so one more question. How about, so anybody that was completely confused, other than that gentleman who doesn't know what, and we can help him later. Okay, what about price target for the trade? That's totally up to you. Okay, that's totally up to you, right? Your exit is up to you. If you are taking this accumulation setup and you're loading the ticker and you're waiting for the break and you have it at the perfect entry and it slowly breaks over congestion and breaks through congestion, breaks over resistance and rips on news, you have to be in control of your price target. I don't know, 20%, 25, 30. It's up to you. What's your trading strategy? When I take accumulation strategies from Superbloom, my target is actually at least 50% at the 20% mark and the rest at the 80% mark. Who knows, right? So that's up to you, the price target. I never talk about price targets because that's an individual thing. If you're a multi-millionaire, you don't have a price target. All right? If you're building a small account, your price target's like 10%. You want that account. Okay? Anything about the time frame analysis? And maybe there are confusing points, but watch the videos and then go through the video. Go through this class again, I guess. Okay? That time frame, it was over the 1 hour time frame, right? Because I could do the 1 hour time frame. Remember how I did it specifically, right? I will look at it on the, okay, remember. So my screen could look like this, right? Notice that my screen can go 1 hour here and 5 minute here. And then on the 1 hour, I notice a big wedge or something, right? On the 1 hour on my left, I notice a big wedge. On the 5 minute, how can I notice it? I can't. I can't notice it on the 5 minute. I'm looking at the ants crawling in a hill using a microscope. I don't know that behind me there's a big gorilla. I can only notice that on the bigger time frame. When I step back, a longer time frame, I look back and say, wow, there's a big gorilla behind me, right? This is why I need a bigger time frame. I need to step back and see. Does that make sense? And I was like, guys, a big ass pennant is forming here on the 1 hour time frame that we are not seeing. An explosion is coming. Guys, on a daily, the bull flag is forming here that we're not recognizing. That's why it's consolidating on the 5 minute. Does that make sense? What I just said there? On the daily, this huge bull flag is forming. That's why on the 5 minute we can't see. We can see it consolidating in this flag area, but we don't know what's happening. We step back. Oh, this is a big flag. I see it now. Right? So you have to piece it together. Each time frame gives you a different piece of information. Okay? Now tomorrow, this will help you. For those who went to class, this will help you piece together how the tape and the level 2 flows into this information. Right? It's going to give you more data. How does Super or TJ understand where the market wants to go? Because we're looking at it multiple time frames. We're seeing at the whole market. We're looking at the SPY, we're ETF, all these different UVXY, right? It's like, okay, the market feels like it's going to go up or down, but we don't know. We're just guessing anyways, okay? That's it. That's it for hour and 30 minutes. So I'm going to get off now.